This is the Captain Crypto Show, navigating the treacherous seas of cryptocurrency to help you arrive into port safely and secure your loot. Here's your host, Kylan Hurt.
Ahoy there, me mateys. Welcome back to the Captain Crypto Show. I'm your host, Kylan Hurt, but you could call me Captain Crypto.
In all seriousness, welcome back to the Captain Crypto Show. Today's part 2 of our voyage, and we're going to be covering the topic of how to get Bitcoin and other cryptocurrencies.
In our first episode, we covered the topics of what is Bitcoin and what gives Bitcoin its value. So if you're not familiar with Bitcoin, feel free to check out episode 1. Now, I'm sure a lot of you listeners out there have heard about how great of an investment Bitcoin can be. But, like many investments that can give great returns, there can also be great risks. And, for that reason, before we go into how to get Bitcoin, I'm going to go over a few guidelines. Now, to be clear here, these guidelines are primarily for people looking at Bitcoin and cryptocurrency as an investment. If you're only looking to purchase Bitcoin so that you can buy something online, then not all of these guidelines are going to apply to you. I personally have been involved with buying and selling Bitcoin for over 5 years. And during those 5 years, I've learned a lot of difficult lessons. Now that active and thriving cryptocurrency communities have arisen on the internet, cryptocurrency traders have been able to share their knowledge with others. These online discussions have produced patterns and caused the community to reach consensus on some of the most common pitfalls that traders can experience. I should make it clear here, for legal reasons, that the wisdom I'm about to impart on you does not constitute financial advice. I am not a financial advisor, and these are just guidelines that I've found useful to help protect myself and my funds. Now, I know that since some of you are new to trading cryptocurrency, that some of these guidelines are going to sound very confusing. But I'm going to go through them anyway, since I think it's something that a lot of listeners are going to want to hear. Right now I have 6 guidelines, but I definitely reserve the right to add new items as I see fit. So let's go ahead and start. The first guideline is to never invest more than you're willing to lose. Since cryptocurrency is very volatile, that means that you can see incredible gains, but you can also see terrible losses. Additionally, since cryptocurrency tends to be immutable, that means if something occurs where you've lost your funds, there's a good chance that you're not going to get them back. Without a doubt, cryptocurrency tends to be a high-risk, high-reward investment opportunity. Guideline number 2. View cryptocurrency as a medium to long-term investment, not as a get-rich-quick scheme. If you look at the historical data for cryptocurrency as a whole, you'll notice that the trend shows an exponential increase in value. While there can be sharp ups and downs in the short term, having a little patience is an investment strategy that has paid off handsomely. Additionally, the space is filled with plenty of scammers, and the type of individuals who are looking to get rich quick without putting in any work are the exact types of personalities that the scammers are looking to target. Don't get greedy and don't make yourself a victim. Our third guideline is to try to always maintain control over your funds. That means keeping control of your private keys. If someone else is holding on to your funds, then they're not your funds. For example, people looking to do day trading often leave their funds on an online exchange for extended periods of time. Unfortunately, over the years, many of these online exchanges have been hacked or become insoluble, and when this happens, users often lose all of their funds. This also means you should be careful when handling your private keys, because if someone else ever gets their hands on those private keys, then you are no longer the only person with control over those funds. Or if you lose your private keys, you better have a backup plan, because without those private keys, those funds become inaccessible. Our fourth guideline is to beware of possible market manipulation. This is especially applicable to smaller cryptocurrencies. Due to their smaller market sizes, the buying or selling of one individual can have a large impact on the price of that cryptocurrency, especially if those buys and sells are relatively large. There are many big investors who know that if they buy a large amount of a cryptocurrency, that the resulting increase in price can get greedy traders hyped up. Once this additional trading activity causes the price to increase even more, these traders sell a large quantity of their holdings, causing the price to plummet, and resulting in losses for many smaller traders. If there doesn't seem to be a good reason for a price going up, then don't believe the hype. Our fifth guideline is to consider leaving a buffer of fiat currency in your bank account. That way you have enough fiat money readily available to pay your bills. Nothing is worse than figuring out that you don't have enough fiat money to pay for all your bills, and that you're going to have to sell some of your cryptocurrency at a loss. And our last guideline is that you are responsible for your investments. Cryptocurrency gives you control over your money, and therefore gives you control and choice over your investments. So take some responsibility for your decisions, and don't blame your losses on others. As the saying goes, buyer beware. Alright, now as some of you might remember, at the end of our last voyage we were just pulling into port. And since we're anchored in a port city, this would be a great place for us to go ashore and check out the local marketplace. If all goes well, we should be able to score ourselves some Bitcoin and possibly even some other cryptocurrency. Let's jump in the skiff and head ashore. Alright, now that we're coming up to the marketplace, it would be a good time for me to go over the two main ways that you can get Bitcoin. The first way to receive Bitcoin is to have somebody send you Bitcoin. This can either be in return for products or services, or of course, someone could just give you some for free. If the latter happens to be the case, don't forget to say thanks. The second way to get Bitcoin is to become a Bitcoin miner. We made a brief reference to this in the last episode, and becoming a Bitcoin miner is so advanced and costly that we will only fully cover that topic in one of our later episodes. To be honest, the first step to receiving Bitcoin in return for products or services may be as simple as you advertising that you're accepting Bitcoin as a method of payment. As Bitcoin usage becomes more widespread, it becomes more likely that your customers and clients will be willing to pay you with Bitcoin. There are several job boards online that specialize in helping match contractors with customers who are willing to trade with Bitcoin or other cryptocurrencies. If you're really lucky, you may end up working for an organization that pays its employees in Bitcoin. This is especially common within the cryptocurrency industry, where many of these organizations make their revenue denominated in cryptocurrency. So by paying their employees with cryptocurrency, they can avoid the markup on exchange rates. Another common method of acquiring Bitcoin and other cryptocurrencies is to meet up with someone in person in your area and exchange fiat currency or other goods for cryptocurrency. This option is especially useful for individuals who are looking to keep their transactions offline or do not want their cryptocurrency activities being tracked. If you happen to live in a well-populated area and don't like dealing with people, or are concerned about your privacy, then do a quick online search for Bitcoin ATMs in your area. You can pay these ATMs cash in return for Bitcoin, but due to their convenience and ability to let you do the exchange anonymously, don't be surprised if you see a high exchange rate on one of these Bitcoin ATMs. In my experience, however, the most common method for the average person to obtain Bitcoin or other cryptocurrency is to go through an online exchange. Online currency exchanges play a pivotal role in the cryptocurrency ecospace. So, as we walk up to the busiest part of this marketplace, I'm going to explain to you how to use one of these online currency exchanges to get yourself some Bitcoin or other cryptocurrencies. Okay, so online exchanges are split up into two different groups. The first group are online exchanges that trade between fiat currency and cryptocurrency. And the second group are exchanges that trade between different types of cryptocurrencies. Now, naturally, in order to use the second type, you first need to have cryptocurrency. And in general, the most common method that I see for people acquiring cryptocurrency is to first buy some through one of these online fiat to cryptocurrency exchanges. Some of these exchanges you may have already heard of. For example, in the United States, Coinbase is the most popular option. Some other prominent US options include SFOX and Glidera. The chances are that if you live in a fairly populous country, that there are likely already fiat to crypto online exchanges operating in your area. So if you're not familiar with any off the top of your head, then do a quick online search. Just search your country's name, then cryptocurrency exchange, and see what results you get. Now, at this point, I'm not really interested in giving you a review of individual online exchanges. Instead, I'm going to lead you through the general process of setting up an account through one of these exchanges and purchasing cryptocurrency. Most of these online exchanges operate on a website and in some cases also operate through a mobile app. In order to make the trades, you're likely going to have to set up an account. And I feel a little obligated to give you a heads up here because there's one specific part of this process of setting up an account on one of these exchanges that tends to surprise people. Since fiat currency is involved in the funding of your trades and national governments tend to have tight control over their fiat currencies, this means that the government regulatory bodies like to know who is transacting with their fiat currency and for what reasons. The general reasoning that they give for collecting this data is so that they can fight things like terrorism, the drug trade, corruption and bribery, illegal weapons trade, tax evasion, and other illicit activities. While these online exchanges may or may not like to collect this sort of personal information, they are generally required to by their national governments. And the term given to these collections of laws and regulations is KYC, which stands for Know Your Customer. And it asserts that these exchanges can be held accountable for the activities of their customers. In the past, the United States government has cracked down pretty hard on other nations that did not strictly enforce these types of regulations. So, as you set up a new account on one of these sites, you're going to find that they're going to ask you for a lot of personal information. This may include your name, your address, social security number, a copy of some sort of photo ID, and your bank account or credit card information. As you provide them additional pieces of valid information, they will increase your trading capacity. So while giving up some of this information may freak some users out, just know that the exchanges collect this information primarily to protect themselves from regulations and liability. The bank account and credit card information you're going to have to give up anyways, because that's how you're going to be funding this cryptocurrency purchase. If you're ever really hesitant to give up private information to a cryptocurrency exchange, then do yourself a favor and do an online search to get feedback and reviews from other users regarding that online exchange. If, however, the exchange has rejected your request to create a new account, then you're most likely going to have to use one of the other methods of acquiring cryptocurrency that we mentioned earlier. So, now that we've connected the exchange to your method of funding, in order to make our first purchase, look around the user interface for a button that says something like Buy or Buy Bitcoin. The cryptocurrency exchanges typically make money off your purchases, so they usually make finding these buttons very easy. Once you're on the Buy screen, it's usually going to show you an exchange rate, a fiat amount, and a cryptocurrency amount. As you enter an amount into either the fiat currency input or the cryptocurrency amount input, you should see the other input field autofill an amount. That amount will be based off the exchange rate. Keep in mind that every exchange has a different exchange rate, and these exchange rates are affected by a large number of factors. Naturally, if you do enough trading, you're going to want to find the exchange that gives you the best rate. Once you're ready to make your first purchase and you've double-checked the amounts, go ahead and click the Buy button. If you're using a good exchange, it'll usually have a box pop up asking you to confirm your purchase. Once again, make sure that the amounts are right, and when you're ready, complete the purchase. Don't be surprised if the exchange uses two-factor authentication, either through email, text message, or some other authentication method. Although this two-factor authentication may be annoying at times, it can really save your butt if your account ever gets compromised. Congratulations, now you've purchased your first Bitcoin. Unfortunately, due to the way that the exchanges interface with the fiat currency banking system, there's a good chance on your first purchase you will not receive your Bitcoins for a few days. This is because as a new user, you're considered high risk, meaning that you haven't built up enough trust yet, and the exchange is waiting for the transaction to clear your bank. Now, there are exchanges that offer an instant buy option. This is very convenient, but they typically ask for a less favorable exchange rate in return for this convenience factor. If you're one of the new users that's going to have to wait a few days, then go ahead and find something else to occupy your time with. And check every 12 hours or so to see if your Bitcoin has arrived yet. Once your Bitcoin has arrived, then congratulations, you now officially own Bitcoin. Most likely, the exchange will let you see the real-time value of your holdings, and occasionally checking the value of your holdings can actually be a lot of fun. especially when the value's going up quickly. So now that you own Bitcoin, we're going to take a quick break, and after that break, I'm going to show you how to send and receive Bitcoin. For those of you listeners out there enjoying the show, I'd love to get your feedback on how I can improve it. I can be found on Twitter at CaptainCryptoHD and on most social media as Captain Crypto or Captain Crypto Show. Whatever the platform, just look for my logo. Also, be aware that due to the technical aspects of each platform, that my podcast feed will always have the most up-to-date and latest revisions of each episode. So, if you're enjoying this podcast, please give us a review on iTunes or share this episode on social media. Now, back to the show.
Alright, since we already have Bitcoin, we're going to focus first on sending it, since that's the way that you're going to end up paying for things with Bitcoin. Let's say, for example, you're ordering something online, and the vendor or the website accepts Bitcoin as payment. Once you go through the checkout process, they're going to give you either an address or a QR code, which will be the destination where you will be sending your Bitcoins to. If they give you an address, that address is going to look like a long string of characters of a bunch of letters and numbers. That long string of random numbers and letters is their address. That's where you're going to be sending your money. Alternatively, for convenience, they could give you a QR code. A QR code is essentially a two-dimensional barcode. It'll look like a black and white square. And these QR codes are most convenient when you have a mobile device on you. Either way, from within your Exchanges app, you're going to want to press the Send or Scan button. This button can also look like an arrow, typically pointing to the right or upwards. Along with an address or QR code, the vendor should give you a specific amount that they expect as payment from you. So either copy and paste the address or scan their QR code. Once you've entered the amount and the address, I highly recommend that you double check both of these values to make sure that you're sending the money to the correct place and that you are sending the correct amount. Especially check the address, because if you've entered in the address belonging to someone else, there's a good chance that you won't be getting that money back. Additionally, some apps let you enter in a note here for this transaction. This specifically comes in handy when you're going through your transactions later, because it helps you mentally match up what each transaction was for. Once you've double checked everything, go ahead and press send. If there's a confirmation pop-up that comes up, and once you've deemed those values to be correct, go ahead and confirm it. If you don't receive an error message, then congratulations, you've just sent your first Bitcoin. Now, keep in mind that since the network is peer-to-peer, it may take a moment for the transaction to hit the network. Perhaps more importantly, a lot of merchants like to wait until your transaction has received several confirmations before they consider your payment complete. With Bitcoin specifically, transactions get approximately one confirmation every 10 minutes. So if a merchant wants 6 confirmations, that means it's going to take 1 hour. In general, the larger the purchase, the more confirmations the vendor would like to have before considering your payment complete. This time period for payment completion can be a little bit of a sticking point for some users. And this is actually one of the major reasons that other cryptocurrencies have emphasized faster confirmation times. For example, Litecoin gets on average 1 confirmation every 2.5 minutes. And Ethereum gets a confirmation approximately every 17 seconds or so. But even with a small delay, most vendors like cryptocurrency because once the payment is complete, there's no chance of chargebacks. The money is theirs. Now that we've sent Bitcoin for the first time, it's time to check out the other side of the coin. It's time for us to receive some Bitcoin. Now, obviously, you're going to need someone else to be the counterparty in this transaction. You're going to need someone who's going to be sending you the Bitcoin. It's going to be a lot like our process of sending Bitcoin, except you're going to be the vendor. The roles are going to be switched. First, in your Exchange app, find your Bitcoin address. A lot of applications will either have a receive button or a request button, and in some cases this may be represented by a QR code symbol or an arrow symbol pointing downward. Your address can take the form of one of those QR codes that we mentioned earlier, or it can take the form of a random string of letters and numbers. The critical point is that you're able to get that address to the person who's going to be sending you the Bitcoin. That means that either you can use copy and paste with the address string and email it or text it to them, or you can have them use their QR code scanner to scan your barcode. Once they've entered in your address and chosen an amount to send you, they can just press send, double check the information, and then confirm. You should see the amount hit your account relatively quickly. If you are using a good app, it'll usually show up at first as pending or as an unconfirmed transaction. As the transaction gets more confirmations, that pending status should eventually go away. And once that pending status goes away, the Bitcoin are yours. If all has gone well, then congratulations. You've had Bitcoin sent to you from someone else for the first time on the Bitcoin blockchain. If you ever wanted to see the details of your transaction, you can copy and paste your address into a blockchain explorer. For example, blockchain.info. If you enter your Bitcoin address into the search input field and press enter, it'll show you all sorts of information about both your address and your transactions. This is a great way to see how many confirmations a transaction has if the transaction is having problems showing up in your app. Alright, now that we know how to both send and receive Bitcoin, we're going to have some fun, and we're going to send some of that Bitcoin to a crypto-to-crypto exchange. And I'm going to show you how to buy other sorts of cryptocurrency with your Bitcoin. These sorts of exchanges run at a very rapid pace and have all sorts of information in them. So we're going to go back to the local marketplace here and see what kind of prices we can get for some of the other cryptocurrencies with the Bitcoin that we have. So the good thing about crypto-to-crypto exchanges is that they have to deal with less regulations. This is because they tend not to interface with the traditional fiat currency system. And because they don't interface with any specific fiat currency, this means that if the country where their servers are hosted cracks down on cryptocurrency trading, that they can just move their servers to a different country. Of course, if you remember my guidelines, this means that these exchanges can be risky to keep your money on for any extended period of time. They face fewer regulations and generally have less accountability. So when I'm using an exchange to switch between cryptocurrencies, I usually deposit my money quickly, exchange, and then withdraw my money to a safe place quickly. What's a safer place? We're going to be covering that in episode 3. For now, whatever month or year it happens to be that you're listening to this episode, do a quick internet search, look up altcoin exchanges. That's ALTCOIN. Altcoin is short for alternative to Bitcoin, or alternate coin, and it essentially refers to any sort of cryptocurrency that is not Bitcoin. As Bitcoin continues to slowly lose market share, the term altcoin becomes less and less useful. Nevertheless, do an online search and also check out the user reviews and feedback for each of the exchanges. Once you've decided upon which exchange you want to try using, go ahead and start an account there. Exactly how much personal information the exchange asks for will depend on which exchange you choose. And similar to the fiat to crypto exchanges, your daily limits will likely increase as you provide more personal information. Once your account has been created, you'll have to find an area that says something like wallets or deposits. And from within that page, you'll have to find the area where they give you the Bitcoin address where you can send your deposits to. As mentioned before, the Bitcoin address may come in the form of a bunch of random letters and numbers, or it may come in the form of a QR code. Once you find this address, you're going to want to copy it over to the earlier exchange that you were using when you first bought Bitcoin with fiat currency. This should be the app that you were using earlier in this episode, when I showed you how to send Bitcoin. The process is going to be essentially the same as it was earlier in this episode, except this time, the destination Bitcoin address is going to be the one that you just copied or whose QR code you just scanned. So go ahead and send over the appropriate amount of Bitcoin that you want to trade. As a general rule of thumb, if you're ever uncertain about the address that you're sending your Bitcoin to, go ahead and start off by sending just a small amount and make sure that it gets to its destination correctly. Once you've seen that it's gotten to its destination just fine, then go ahead and send over the full amount that you're looking to trade. Again, we're most likely going to have to wait for a few confirmations before these funds become available for us to trade on the exchange. So go ahead and be patient here and check every 10 minutes or so to see whether the funds show up in your account. Once they do show up, you're ready to trade. Now, in order to place a trade, you're going to look for an area of the website that should say something like buy, exchange, trade, or market. Once you found that area, go ahead and click on it. Once that page loads, there should be a list somewhere showing all the different types of cryptocurrencies that you can buy with your Bitcoin. Go ahead and click on the one that you're looking to trade for. If you clicked on the correct link, You should be able to tell because the page that it takes you to should show you a chart showing you a graph of the exchange rate between Bitcoin and the cryptocurrency that you've chosen. Somewhere else on that page, usually underneath that graph, it'll show you an area where you can buy and sell that cryptocurrency. At this point, it obviously makes no sense to sell that cryptocurrency because we don't have that currency yet. And remember at this point that we are buying the cryptocurrency with Bitcoin. So the exchange rates that you're looking at will be denominated in Bitcoin rather than fiat currency. If you want to figure out what the price of that cryptocurrency is in fiat currency, you're either going to have to do the calculation by hand, or if you're lucky enough to live in the United States, you might be able to compare it to the cryptocurrency listed with the code USDT. This stands for United States Dollar Tether, and it's a tool that some exchanges utilize in order to compare an exchange into a token that represents US dollars. However, even though they represent US dollars, you cannot withdraw them to your bank account. Remember, this is only a crypto-to-crypto exchange. So, much like when we were buying Bitcoin, now we're going to be buying a different cryptocurrency with Bitcoin. We should see a similar area with 3 input fields. One that shows you the total number of units of the cryptocurrency that you're attempting to buy, another field for the exchange rate between Bitcoin and that cryptocurrency, and the third field showing the total amount for the trade in Bitcoin. Your best bet for making sure that your trade goes through quickly is to set an exchange rate that is very close to the current exchange rate between Bitcoin and that cryptocurrency. Some exchanges' user interfaces also can populate this field automatically. Once the exchange rate amount is entered correctly, you should be able to enter an amount into either of the 2 other boxes. And by populating 2 out of those 3 boxes, the exchange should autofill the 3rd box. Before clicking the button to have the exchange execute the trade, just double check that all 3 boxes have appropriate amounts, especially the exchange rate. I've heard of users accidentally putting in the wrong amounts and losing tons of money as a result. If you're trading a large amount of money, you can never be too careful. Once everything looks good, go ahead and execute the trade. The button for this will usually just simply say buy. Once your trade request is processed, the exchange looks for a counterparty to your trade, someone who's looking to sell the crypto that you're trying to buy and who's looking to buy Bitcoin that you're trying to sell. If several minutes go by and your trade has not been completed, you may want to cancel the order and redo it, but this time with an exchange rate that is slightly less favorable to you. This way, it'll be easier for the exchange to find a buyer willing to trade at that exchange rate.
I should also mention here that it's good practice to have accounts on multiple exchanges. This means that if any given exchange is having technical difficulties, that you at least have other options to get your trades completed with. While a lot of the exchanges might be reliable during your average day, when prices start to fluctuate a lot, some of the exchange's servers cannot handle the load. So having accounts on multiple exchanges will help ensure that you can get your trades done when you need them done.
Once your trade has been successfully completed, you should see a non-zero amount balance for the altcoin that you just bought with your Bitcoin. If you do see this, then congratulations, you've just bought your first altcoin. Dare I say, your treasure chest full of cryptocurrency is starting to fill up, isn't it? But, as I alluded to in my guidelines, you shouldn't keep your cryptocurrency on an exchange for very long. Having treasure in a treasure chest isn't that great of a thing if you don't own the keys to it. So, as we wind down this episode, don't stray too far because during our next episode, we're going to be covering perhaps the most critical topic within cryptocurrency: how to store your Bitcoin and cryptocurrency.
I'd like to give a little bit of a shout out to that scallywag, Matt, at the Pirate History Podcast. His show has helped give me a little bit of inspiration for the pirate theme of this podcast. I'd also like to give another shout out to Stargate Pioneer of GonnaGeek.com for doing the vocals on the intro. So until next time, this is your captain telling you, set sail.